Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Let me just move that a little. There we go. It is, what is today? Friday, July 22nd, and this is your daily financial news. If you like getting your news in little quick snippets, like, subscribe, comment, interact with me, say hello. I would love to hear from you. And also, I wish you a very, very happy weekend. As we get started, I have to tell you, I am ecstatic about what is happening tomorrow. Tomorrow at 9 a.m., and yes, Sunday at 9 a.m. Those are going to be big, big days and times for you and for one rental at a time. What is it? Well, we have now started doing deep dive Saturdays, where we take a topic, we find other experts, and we interact almost like a virtual mastermind. Some of you have called it that, and I think you are right. Tomorrow, 9 a.m., the invitations just went out. I posted it in the Facebook group, our private group. I put it out on Teachable. So the invites are out. Tomorrow, 9 a.m., we are talking house hacking units. We have the one and only Matt, the lumberjack landlord, the ninth grade dropout, who amassed over 100 of units because of house hacking. We have Dion, who earned financial freedom in 8 years while starting with a negative net worth of 79 grand, a single parent of 2 young kids making $17 an hour. Their stories are outstanding. Their stories are built on the foundation of house hacking units. You need to listen, you need to ask them questions. So why is it 2 days? Saturday at 9 a.m., if you're one of my students, you have the invite, you can ask your questions. We will go for 90 minutes, and it would not shock me if we go a little bit longer. Okay, great. That's Saturday. What about Sunday? One rental at a time, we give back. So Sunday, 9 a.m., you could see the full replay right here. You won't be able to ask questions because it will be a replay, but I have to do that because I want to control who is in the group. I don't want haters and bots and just knuckleheads screwing it up. So again, if you want to ask questions, you want to be in this virtual mastermind, buy the course today, How to Get Started One Rental at a Time. I will send you the link myself so you are in tomorrow. If you don't have $320, I get it. There was a time in my life I didn't have $320. Just wait till Sunday. Set your alarm clock, 9 a.m. Pacific. It will be out there for you to take a look at. This weekend, we are changing lives. There will be lives that in a decade do not resemble themselves. And it is going to be awesome. And we are going to get to thank Matt and Dion for showing us the way. I am so excited. I am almost vibrating with I might have trouble sleeping tonight. Tomorrow should be so much fun. So there you go. Snap in Twitter. Man, first off, let's talk about Twitter. We've been talking about Twitter, right? Elon Musk buying it. Elon Musk, messing it up. We've even talked about Twitter. There's no chance they can hit their earnings. Sure enough, Twitter did not hit their earnings. They missed top line, they missed bottom line, and they missed average daily users, or AUM, or whatever they call it. Not good. Just all kinds of bad. And I think it gets worse from here. Twitter did win the first legal battle. They have a court, I think it's in October, a quick 5-day trial. So we'll see. But yes, Twitter blamed the macro environment, but of course, they called out Elon Musk as one of the reasons. Next up, Snap. I don't know what's going on at Snap. I don't use it. I don't get it. I don't care. However, let's talk about Snap because this is important. Snap, 90 days ago, missed their earnings. They gave us guidance. Snap, 3 weeks later, had to revise down their earnings, right? It's called a pre-announcement. So they set the bar here. They lowered the bar here, and then, folks, they missed. Snap, missed top, missed bottom after cutting guidance. Here's the deal. Snap's CEO is nervous. Snap CEO knows his stock is going to get hammered. So what does he do? He looks over at his treasury and goes, let's spend $500 million buying our own stock. Dude, that is a loser strategy. You are manipulating the market to your own benefit. Your shareholders should fire you. You are a bad CEO. You can't fire him because he has all these stupid shares, and it's still bad, horrible leadership. You should take that $500 million and invest in the product, invest in the team, do something. I hate it when CEOs take care of their own compensation by wasting your money. Let's be clear. That $500 million is your money. It is the money of the shareholders of Snap. Just a horrible, horrible, bad look. But again, set expectations, lower them, and miss again. Not a good look. Not a good look. The 10-year, man, the 10-year note is crashing again. Crashing. We're probably getting a 75 basis point move next Wednesday from the Fed, but the 10-year is crashing. I think on Monday it was like 3.03, something like that, over 3. It's now at 2.8, 2.81. Down. There, the smart money, as we've talked about with Taylor on Monday, is clearly saying we're in a recession. I believe the recession started July 1st. We won't know for 9 months. But yeah, it's ugly out there. There's a chance. It's not likely, but there's a chance that the 3-year note, 90-day note, trades for more than the 10-year. Right now, the gap's about 40 basis points. Right now, the 1-year note gives you 3.04%. The 2-year note gives you 3.03%. The 30-year note, get this, folks, I'm going to loan you money for 1 year at 3.04%. However, if you want to borrow that same money for 30 years, I'll pay you only 3.01. Yes, why would you borrow 1 year when the 30-year is lower? Pay it off early. What the heck? Just nuts. And the 2-year, or the 10-year, the 10-year is crashing. Just absolute nuts. 2.818. The yield curve is getting steeper. The negative yield curve is getting steeper. Crazy times. Let's talk about 3. Yes, folks, 3 types of recessions. This is something we have to start thinking about. Okay, great. Michael, you're telling me we're going to go into a recession in the second half, and we are in one right now. But what kind? Well, I don't know. I don't know, and frankly, no one knows. But there are kind of 3 types. There's the mild, the moderate, and the severe. So what I thought I would do here is just kind of articulate what I believe. These are not technical definitions. These are not taught in economic school books. These are just my gut feel to explain the difference between a mild, a moderate, and a severe recession. So here we go. A mild recession. What might that look like? Well, unemployment, which again today sits at 3.6%. In a mild recession, I do not believe unemployment goes above 5%. So we go to 4.2, 4.4, 4.6, but we don't break 5%. In a mild recession, it is probably 2 or 3 quarters in duration, length. And we're talking GDP hits of about 1%. That is a mild recession. Okay, great. If that's mild, what is moderate? All right, same metrics. A moderate recession, unemployment probably gets over 5%, but stays under 6. right? For most of my adult life, economists believed full employment was 6%. That was revised down to 5% in the last decade or so. So if we get above 5, which is above full employment, but under 6, that is probably a moderate recession. A moderate recession probably is a year long. It is a little bit more severe. The GDP hits might top out at 2%. So again, unemployment 5 to 6%, 4 quarters in a duration, a full year, and GDP hits up to 2%. All right, now a severe recession. A severe recession has unemployment going over 6%. Also, I believe a severe recession, the rate of change, the speed that unemployment rises will be something to behold. It will not be like March of 2020 where we shut the economy down, but it will be noticeable. We will be talking every Thursday about new unemployment claims being 500,000, 600,000. For the record today, they're about 250 to 270. So they'll double. So the rate of change and the rate. Next, a severe recession could be up to 2 years, right? The average recession is 18 months. A severe recession, it may take us 2 years to get out of. And then finally, GDP hits are greater than 2%. So that's, again, not a technical definition. I just want you to know that all recessions aren't created equal. Again, these are my stands. If you want to take a shot at telling me what you think mild, moderate, and severe is, you can always leave comments below. I read all the comments. I leave them all unless you put out hate or you attack somebody I care about. Other than that, I leave them there. But yeah, would love to hear from you. Rent. Don't know if you saw this, but rent hit another record. Rent $1,876, up 14%. Up 14%. Again, I believe rent is a lagging indicator. Lagging. I believe rent has to get softer. Rent is unaffordable for too many. I believe landlords, specifically syndicators in big apartment deals, are being foolish. I believe their assumptions for future rent increases are unhealthy. I see lots of pain in apartments. Single-family homes, not as much. Yesterday, I think we talked about John Burns Real Estate Consulting, who did a great study of single-family home rentals. We are actually down 7 years in a row. We are down in total units and units by percentage. So I believe the single-family rentals will be okay, possibly up. We like our space. We like our backyards. We like our garage for our junk. So again, if you're investing in syndications, look at their perspective, their proposal, their assumptions. Some of them are being foolish. They're being foolish with your money. And then finally, earnings. So we talked about Snap and Twitter, a lot more coming. Mattel, the toy manufacturer, beat on top line, beat on bottom line, but flagged the forecast. Their flagship brand, American Girl, I don't know what that is, but apparently it dropped 20% last quarter. Not good. Revenue took a hit from currencies. What did we talk about the last 90 days? I told you more and more companies would blame the strong dollar for their currency impact. And Taylor, just on Monday, told us that for every 1% increase in the dollar, it hits S&P 500 0.5%. Check out that video. It was amazing. Capital One Financial missed top line, missed bottom line, and gave disappointing trading results. Intuitive Surgical missed top line, missed bottom line. Apparently, the resurgence of COVID is causing people to cancel procedures. Intuitive Surgical is that big robot thing that does the surgeries. Boston Beer missed top, missed bottom, and slashed full year guidance. Apparently, their hard seltzer business not doing so well. What else? I got some more. American Express American Express. We talked about American Express on Saturday, I think, when we do our look ahead. American Express tells us what, remember we talked about the K-shaped summer, right? If you're in the top 20%, you're going bananas and ham and crazy. American Express is proof positive that the K-shaped summer happened. It just did. It just did. American Express, record spending on travel and entertainment. They beat top line, beat bottom line. Again, American Express typically, or it has the highest average credit rating used by small businesses. Some of us are partying like it's 1999. It is what it is. Verizon missed top line, missed bottom line, and cut their forecast. Ouch. AT&T told us that people are paying their phone bill late. Just think about that. The average collection on AT&T's phone bill in the last 90 days extended 2 days. We've been talking about car repossessions. We've been talking about Rolex watches going back to the stores. Man, if people are paying their phone bill, ouch. And then finally, Seagate, disk drive manufacturer, missed top line, missed bottom line, and gave weak forecast because, folks, we already bought a lot of computers. We pulled all that demand forward. Again, pretty crazy stuff. So kind of summarizing earning call so far, 85 of 91 earning calls, which is we've had 91 companies out of the S&P 500, so about 20%, about 19%, have said inflation is hurting our earnings. I wonder what those 6 companies do. They're probably in oil services, I would guess. They're probably in oil. I don't know what they are. I didn't look. So 85 of 91 flagged inflation as a problem and inflation hurting earnings. 2, they're raising prices. For the last year or so, we have talked about this. Companies have a choice when inflation is around. Their natural reaction is to eat margin, but they only do that for a little bit. If inflation proves sticky, they will raise prices. People are raising prices across the board. That is why the CPI number, PCE, PPI, all these things are likely very sticky. I did a video, you can find it in my whiteboard playlist, where we put a bar chart of CPI. And I said the most important economic question for the year is how much of that is sticky. Because, hey, if you're like Cathie Wood and you believe half or more of that 9.1 is transitory, for lack of a better term, you know, if she's right, the Fed will slow sooner. However, if you are like Michael Burry and you think inflation is entrenched, then, you know, maybe 1 or 2% of that is transitory and most of it is sticky. Why is that the most important question? Because once we have that answer, we will know how high the Fed has to go. It's that simple. So, folks, that's what we got today. Again, I have very low expectations for tomorrow. Tomorrow, Matt and Dion will simply change lives. If you can't make it in the live mastermind, it's okay. It will be available Sunday. Set your alarm clock. This video, quite simply, is going to change lives. I look forward to Matt and Dion getting much props for what they're about to do. This video will hopefully live on for years and help thousands and thousands and thousands of people. Again, 9th grade dropout, over 100 units. It all started with house hacking. A single dad of 2 kids with nearly 80 grand in negative net worth, making $17 an hour, earned financial freedom in 8 years. House hacking. My only regret, or one of my only regrets, is I didn't house hack at 20. My real estate journey started with Norris Drive at 30. 10 years. I failed. And this is something we are going to talk about tomorrow. I don't know. I'm going to have a hard time sleeping tonight because I'm so excited to bring this to you. Matt, Dion, you guys rock. Let's get some congratulations out before I forget. I should have done these yesterday. Luther and Talia. Luther and Talia, congratulations for getting your deal. Your card is going out in the mail. Richard, congratulations for getting your deal. Your card is going out in the mail. And then, folks, if you like to hunt for Easter eggs, I have an Easter egg on my website, one rental at a time, that can get you one of these t-shirts. Hold on, let me grab it 1 second. This t-shirt says, I use inflation to get rich. Ask me how. It's pretty awesome. I like it. But anyways, on my website, one rental at a time, you can get this t-shirt if you buy my course and use a specific coupon code. So who did that? We have 2 people that did that here recently. Colton, your shirt will be in the mail today. And Elijah, your shirt will be in the mail today. Again, folks, you want to be on this mastermind call tomorrow. You want this free t-shirt. I use inflation to get rich. Ask me how. Go to my website, one rental at a time. Find the Easter egg. Find the coupon code. I will talk to you tomorrow. I am truly excited. Dion, Matt, you guys rock. Bye.